Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's day is May 24th, 2024, and this is a Kickstart video where I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar. From a technical perspective, the durable goods orders came in a little bit strong, or actually stronger than expectations. They're expecting minus 0.8. It came in plus 0.7%, but recall that this number can be revised last month. I think the preliminary was 2.6%. It came in at 0.8% or something like that by the end of all the revisions. So be aware and be prepared on that. But we are seeing the US dollar actually moving lower here versus the euro and the sterling. That came despite what we saw in the UK today, where their retail sales were much lower than expected at minus 2.3% versus minus 0.5%. So go figure. Anyway, let's take a look at the technicals. We'll start with the euro versus US dollar. Looking at the euro versus US dollar, the week started near highs and in this swing area up through here, and has progressively moved to the downside and trend. Yesterday, the price fell lower, but came down to and through the 100-day moving average here at 1.0813, but was approaching the 200 or 100 bar moving average on the 4-hour chart. That's this blue line right here. And we found support buyers not only yesterday but today against that level, and that helped to force the price back to the upside. We moved back above the 100-day moving average, and sellers turned to buyers on the disappointment of the inability to get below that level. The price was also, or that moving average was also joined by this swing area right through here. You just blur your eyes and see how the price use this as resistance through here, and then as support through here, support to here, and then resistance here, and then support here. You get the idea before moving to the upside and trading last week, and we came right back down, tested the high of that swing area. In addition to the 100 bar moving average, the 4-hour chart moved higher. We are trading near the highs for the day right now. In fact, maybe making new highs as I type, or as I speak, I should say. And that is propelling, giving the bias a little bit more of an upward trajectory, of course. And let's take a look at the hourly chart. On the hourly chart, we are also trying to move above the 200 and 100-hour moving averages. Note that yesterday the price did move above the 100-hour moving average right here, but that was brief, and the market quickly reversed to the downside, falling below the 100-day moving average. So here we are, second attempt of getting above, in this case, both the 200 and 100-hour moving averages, which are very close together between 1.0841 and 1.01467. This area is now going to be close support from a technical perspective. As long as the price can remain above those lows, the bias remains to the upside. If we move back below that level, we could see some rotation to the downside, much in the same way that we saw in trading yesterday right here. So buyers are taking control in the euro versus US dollar in trading here today. Let's take a look at the dollar versus yen next, and we'll focus on the hourly chart to at least start off here. And I'm going to take it back a little bit here. You see this level up here near the 157.23 level. That level corresponded with just this swing low right here after breaking higher, and then we use that level as resistance right here, and then as a support right here. And we fell below the level right here. It came down to the 100-hour moving average here, moved higher, and then broke below this, and moved sharply to the downside. This is off of intervention as well, so was a pretty much a fait accompli. In trading yesterday, the market came back up toward that 157.23 level. We had a high price of 157.19, rotated back to the downside. As you can see, we've seen a rotation higher in the dollar versus yen here today. We did have CPI data come out of Japan at 2.2%. That was lower than the previous month, but as expected. But it puts into question whether the Bank of Japan will be willing to tighten policy going forward. They did talk about wages increasing. We'll see, but certainly the dollar versus yen is having trouble at the 157.23 level. Keep that level in mind going forward. If we were able to get above that level and stay above that level, that would be more bullish for this pair from a technical perspective. On the downside, watching the 156.75-ish type level. That level corresponded with this high right here. We traded above and below through here, but then moved above it in trading yesterday. We did find some early support buyers against that level here. So watch that level at 156.75 on the downside. If we break below that level, we look toward the 100-hour moving average, which ultimately we're going to need to get below if the sellers are to take more control. That level comes in at 156.53. Finally, let's take a look at the sterling versus US dollar. As mentioned, the retail sales number came in much weaker than expectations, and true to that number, the price did move lower. But where do we find support? Right at the 200-hour moving average. The price came right down to that level. Buyers were leaning against that level, probably with a stop below the level, and the inability to move below that level forced the price to the upside. We moved back above this level, which I had earmarked in videos and discussions yesterday on the board. This level corresponded with different swing lows and swing highs going back in time, including here and here and here and here and here again, and yesterday here. So you can see the number of different times the market found support against that level, including trading here today before breaking to the downside, finding support against the 200-hour moving average, moving back above, and then reestablishing support against this level before moving to the upside. We are back above the 100-hour moving average now and looking toward this swing area through here. If I go to the 4-hour chart and look back in time, you can see the derivation of this swing area going back to this area right through here. Admittedly, the price moved above and below that level, but you can sort of blur your eyes and see how it was either support or resistance through here as the market waffled up and down, and didn't return to that level until this week, where the price initially came up to the lows of the area, broke above it. Got a little messy through here, but we need to get above the 1.2722 to 35 level to increase the bullish bias in the sterling versus US dollar. We're at the low of that extreme right now. Remember, retail sales did come out weaker than expected, but this week we did see the CPI data come out stronger than expected. So there's a little bit of a yin and yang in the pound versus US dollar from a fundamental perspective this week, and we're seeing that reflective in the up and down price action for this pair all week long. So that's my technical look, my Kickstart video, taking a look at the three major currency pairs. My name is Greg Mikulowski. Good fortune with your trading, and have a great weekend. Bye-bye.